Good morning, everyone, and welcome to the PivotBoss pre-market video for Thursday, November 30th, 2023. I am Frank Ochoa, aka PivotBoss. Happy Thursday, everyone. Here's a look at the daily time frame of the ES. After the previous session, had a bit of a strong high early in the day, a rotation back into the previous narrow range below, and while it was a great rejection, we're still in a very, very bullish trend. We haven't even tested the 8-period average yet. Things are still quite bullish. We do have some pre-market data points coming out here this morning, including core PCE price index, initial jobless claims, also personal spending index. We have Chicago PMI after the RTH open and FOMC member Williams speaking as well. And the big one will be Friday. Friday morning, 10 a.m. Central, Fed Chair Powell speaks. That's going to be a big one here. We may see better directional conviction there. We're back inside the range, though. Back inside the range. The previous session's midpoint is going to be important. A ricochet off of that could extend this to the bottom of the narrow range. But we're still range bound right now until proven otherwise with a very bullish upward bias. If there's any rejection that happens on a move down here, it could be an opportunity to buy for another swing continuation higher. While we did reach very close to the edge here, 4,600, reaching 45.97 yesterday, that was basically our target when price pushed back above the 4,200 level here. We mentioned that the next two upside targets are now 44 and 46. This is the market structure edge. Last time we dropped off of 46 and dropped back to 42. 46.34.5 is the previous high there. That's this high right there. Do we go extend and grab that high now as well? So this market remains quite bullish. Again, we could see a little bit more movement within the range to the downside here, but this market just hasn't really taken hold to the downside in spades just yet. If we do push down back toward the previous lows here, watch to see how price responds inside the bullish PIMA trigger zone. It could be, again, another buying opportunity. Let's take a look at the NQ. The NQ right here showing a similar rejection yesterday right at the 16,200 level. A very nice narrow range here over the last 2 weeks of trading. You can count back 1, 2, 3, 4, 5, 6, 7, 8, 9, 10 days. Now this is the 11th. So 2 weeks of range-bound action here. And that's building tremendous energy for the move to come. Is it going to be on Fed Chair Powell Friday? Do we see some action here prior to the RTH open after economic data? Right now, we're going to see some movement out of this range. And the fact that we have rallied tremendously and then built this narrow range up here right at resistance means it has an equal shot here to fail back into the range below, or we could see a further extension here. That build-up in energy right there, that narrow compression, doesn't really give you directional conviction. We certainly have a very bullish short-term trend, but being at resistance, got to watch this zone very closely. Eventually, a breakout move could get us an easy 1,000 points. 1,000 points of range right now would be the 125% target. 125 though and 1,000 points fairly easily for current volatility, so should be able to get about 1,000 points once we do get going out of this range. From an intraday perspective, keep an eye on 16.1, failure to get above that zone, and we could be looking at a retest of 16K below. Looking at crude oil. Right now, crude up about 1.4%, a big time move yesterday when it looked like it was showing some signs of rejection near year-to-date VWAP. We're seeing a continuation to the upside here toward the upper end of this range. Now, the top end of this range here has been an area where we've seen some selling pressure, and now we're coming into it again. That's right around 80 bucks. 80 bucks is going to be the level here to watch for a transitional phase back above. Back through 80 opens up a return back toward 90 in the top end of this recent range. If we can't get up there and we start to show this upper trend line as resistance, we may be looking at another rotation back down. Again, The idea is, as long as price remains below this level here, we start working our way down toward the previous year's low and the previous quarter's low. Previous year's low 70, previous quarter's low 69.69. Both those levels coming into view. So while we have seen a bit more pullback in this uptrend than normal, we still are in line for what could be another rotation back down off of this upper trend line here. That could take us into the lower targets up ahead. So still watching for signs of rejection up here in crude oil, although right now bullish with a tested 80 up ahead. Looking at gold futures, gold gapping up through the 2020 level here. Rollover gap up, holding at these highs. One thing we mentioned before is 2080 continues to be major resistance over the last 4 years. This is a 5-year volume profile, and you can see we've only gone that high and then rotated right back down. 2060 is a level to watch. 2060, price doesn't really stay above 2060 for long before a failure occurs, and once a failure occurs, you're rotating right back down the range. So here's 2060, a failure here is a failure coming up ahead. And if so, we could be looking at an easy return back toward 1950 and year-to-date VWAP. Lastly, looking at the YM. The YM here has continued to stretch to the upside, has continued to see strength overall, really hasn't gone sideways like the NQ. Instead, day over day, higher highs, higher lows with an upward bias that's taking us higher toward the next level above. That's the 35,800 level. 35,800, that's major resistance from a market structure perspective on the 800s. We've talked about the 34,800 level, the 33,800 level, which is about right there, 32,800, and we've seen how prices have traded off those levels. So we're still working our way up to 35,800. We're at 35,711 as of right now. The last time we rallied into that zone, we went right to it, got just a little beyond it at 843, and then rotated right back down. So we could be looking at a flush into that zone and then maybe seeing some sort of impulsive move that would give us the definition for some sort of range-bound action to take place. This is a super far move here to take hold without any kind of compression here. So once we do reach the edge, we may be looking at some sort of reaction that helps spark a new key range of some sort. But 35,800 is going to be the level to watch. All right, that is it for now. We'll see how this plays out heading into the rest of the session. Good luck, trade well, and I'll see you in the trading room. Take care.